All right, guys, welcome. I'm gonna do an end of the day market wrap video because today is election day, and I suspect there's gonna be some volatility tomorrow. Whether that's we don't know, I don't know which way the market's gonna go. Obviously, I know which way the polls are predicting, but that doesn't tell me necessarily which way the market's gonna go. So what I decided to do was lighten up on all my positions today. I still have a couple individual stock shorts, but I don't have any indices shorts or longs. I did take a short today on triple Qs up at the top at this downtrend line, and I covered it right there at support. So I had this trend line marked out well in advance. It was there on the previous video and from this morning. And we popped up. We didn't quite get to the resistance line, but I could tell it was starting to weaken out. I took a short. Again, every time someone's looking, when everybody's looking at a specific trend line, you're usually going to stop short or overshoot it. Because we were, basically here and starting to reverse, I figured we were stopping short. So I faded it down to the support. Now, it was a very small trade, kind of a day trade for me. It was only, about 1% gain on that index short. And I went home flat on the index shorts. Now, we do have this downtrend line on triple Qs. We're still below trend. We are in a downtrend and we are below trend. We do have bullish divergence on the hourly as well as it's not really there on the PPO, but it's definitely there on the RSI. So we have bullish divergence on the hourly chart on the RSI, but we have not broken trend. So there's no buy signal, no long signal or anything like that. But if we were to break this trend, we'll watch it. Maybe there's a big gap up tomorrow. That's completely possible. That might be the break in trend, and maybe that sets us up for a move up to, what I think is probably going to be a short rally, but about 280.50 is really what I'm looking at for a potential rally. Could go more though. So, one method, if you don't know how long a rally is potentially going to go, is just to, set a stop loss and just continue moving your stop loss up. That's called the trailing stop loss. So as of right now, I don't know which directions the market's going to go. So we're going to just have to wait for more information tomorrow on the Qs. Top side, I think 28.50. Bottom side, 26 or 266. It's going to be the same with the SPY. You can see here. Here's your downtrend line right here. We basically closed just slightly below it. So election's going to be, that's a catalyst. It's going to move us one way or the other, most likely. IWM. All right. So this is a lesson I think it's important to learn. IWM here's your resistance line on IWM, 159.60. That's held as resistance for years, essentially. And you can see, all the way back from 2018, we've broken above it twice or three times. We broke above it here, broke above it here, and we marginally broke above it here, but that ended up, failing and being a false breakout. Each one of these was a false breakout, essentially. And this one was as well. Now today, they closed it just above resistance. Now what does this tell me? Here's what I look at. When I see a close above a major resistance, I look for a few things. How is the volume? Volume, it's not breakout volume. Slightly above average, a little bit above average, but not breakout volume. So not anything that when you get a breakout above a major level that a lot of people are looking at, usually you'll see quite a bit of volume. I don't see the volume there. That tells me it's breakout volume. Price action, not really breakout price action either, just marginally above. You can see it was above it more at one point, but it faded back down and closed just kind of marginally above. So this is not a breakout price action either. So, and the other thing is it's right before the election. To me, that tells me that this is going to fail. This is a whipsaw or a stop raid is another way to say it. You have this big resistance line, you have stops all above there. They run up, they run all those stops, and then reverse it and head south. So that's what I would think was going to happen. I think there's a higher probability that happens in IWM. I'm going to be watching for that. Gold closed right at resistance. Here's the downtrend line. Nothing to do there. We'll see what happens tomorrow. Dollar just sold off pretty much all day today, but within the range of what it's been at for the last few months, basically going back to July. So nothing, there's no action right there. It's just chop, it's just all over the place in a range. XLV ran up, filled the gap. You can see there's a gap right there. Ran up, filled the gap, popped it over slightly, and then faded. So that's resistance. So I suspect we head lower. And yeah, XLF, nothing, just sideways. Nothing to really gain from that. Now let's look at individual trade ideas. Okay, someone on the channel asked me about BABA, so I pulled up the chart, and I think we've got a trade setup playing out. We don't have there's nothing to take action on yet, but it's something to watch. So when I see these trade setups start to firm up, I keep a close eye on them, and then eventually they'll trigger, or they typically trigger, and I take a trade. So this one, you can see, let's go to the daily on this one. You've got an uptrend line here going back to the March lows. BABA's just been moving higher on it. Today, they gapped it down and closed it right at resistance. You can see it just closed right there. So that's what we're going to use. This trend line, I think, is a pretty valid trend line. If I look at before I move to the hourly, big negative divergence on the daily chart, on the RSI, and also on the PPO. We also have a crossover, a bearish crossover right there on the PPO. So bearish technical indicators, these are momentum indicators indicating that momentum is shifting and we're likely to see a trend change. Now we need to see a trend line break. An impulsive trend line break is the sell signal. We don't have anything yet, but tells me it's going to happen soon. So maybe it happens tomorrow with the elections. I don't know. But if I move to the hourly, you can see nice clean up trend line, gap down and closed right at support. So BABA closed at support. Now, if they gap up tomorrow or the elections are positive or whatever the market tries to, it doesn't really matter who wins. If the market wants to go higher, it'll just go higher on, anything. Whether either candidate winning, the market will go higher if it wants to, So that's possible. Maybe we are in for another bounce, and so there's nothing to do here until we get that impulsive breakdown of the trend line. So watch for that. That will be a potential trade. First profit target I see is this first level of support, 266.70. Energy still looks good. We had a breakout, came in for a back test. You can see here, bullish falling wedge right there on XLE. And there's your breakout. There's your back test. Starting, and we lifted off of that and started to move higher. So we'll see if that continues to move higher. Looks okay to me so far. XOM, yeah, this one closed below resistance. So we'll see. This might have just been a quick little false break higher. And then maybe we got to do another back test all the way down here. As of right now, I still like it. I still think it's bullish. Why? Well, the daily chart has big bullish divergence on it. So to me, I think that the daily chart takes priority over the hourly chart. And when you have a daily bullish divergence, it might take a little time to play out, and it also can continue to extend. But it's there. We've broken out. I think we're going higher. So next level, 36.38. We'll watch that. Next level of resistance. CVX, yeah, still looks good. Just a down day, but it gapped higher, sold off today. Still keeping the bullish divergence on the daily. The breakout still looks like it's intact. So, you can consolidate a little bit and then make the move. That's completely plausible. Whether we consolidate, marginally go lower or chop around sideways and then move higher, it really doesn't matter. This is swing trading. We're not rewarded every single day or rewarded the moment that we take a position. If you want that, you need to look more into momentum trading, and that is just not my style. So someone pointed that out around BBY. So let's look at that. All right, BBY. So this is a trade idea that I still like it, and I talked about this today in the morning video, And they mentioned that, this trade just didn't work out and they didn't, it's just not working out. And what I want to point out is this trade's still playing out. When I put out a trade idea, I don't give you an entry and say you're going to be right instantly. Oftentimes, when you're on the right side of a trade, especially when it comes to swing trading, you often feel like you're wrong initially. Doesn't mean you're going to be wrong at the end of the day, and your profit targets might still be hit, but you often feel like you're wrong right in the beginning, and that's because you're going against the trend. If you're back testing a resistance line, the momentum is to the upside. It's running up and running into resistance. And so the momentum's to the upside. You can overshoot levels a little bit. That doesn't mean that they're not valid. When you have strong upward momentum and you take a counter momentum trade like shorting at resistance, that momentum can still be there. There can still be some lingering traders buying that momentum. That doesn't mean that tomorrow this doesn't gap down and we run lower. So I had my stop set right here at 119.05, looking for a close above that. We did not close above that, so I stayed short. It closed marginally below it. Now you can see they ran it all the way up there intraday, but the daily close was still below it. So we're still, the trade's still there. It's still intact. It hasn't been stopped out. Obviously, if you get a nice strong close above it, we'll stop out and we'll look for a different trade or a different time to enter this. If you look at the hourly here, you had bullish divergence right here on the hourly chart, indicating there's going to be short-term bullish momentum, and we did get that bullish momentum. But we didn't get short this thing all the way down here. We shorted it all the way up here. So at this moment in time, the risk reward, if you took the short, maybe you took it right here at the trend line. So you're down 1%, 1.5%. Okay, that's all within, I think, the reasonable. You got to give your trades a little bit of room if you want to be able to stick with a trade. And the first profit target that I have on this thing is 104.11, which, let's say you entered right there, the profit is about 11.5%. So it's a 1 to 11 risk reward ratio. It's super promising. I like the trade still. And if you look at the daily, the hourly has bullish momentum, but the daily has bearish divergence. Right there is a big bearish divergence. And the daily takes priority over the hourly. Hourly tells you, maybe a little move is coming. Daily tells you what the larger swing trend is likely to be. So I still think tomorrow, I think we probably sell off, but there could be some more upside, but we'll see. But I think ultimately we're heading down. I think we're going to top out right in the area we're at right now. They might pop it a little bit in the morning or something like that and then sell it off. But I think we're in the area where this thing's going to about top out and roll over. If it doesn't top out here and it keeps going higher, this would be a bear trap, false breakdown right here. All this price action was a bear trap. It's that's why you set stops, because the bear traps exist. So obviously I have this stop 118.98. I think that's where I have it. It's about 119.12 or so, 119.20, something like that. A daily close above that, we stop out and live to fight another day and take a small loss. The name of the game is taking small losses. If you entered a position right here and we're wrong, 1.5%, maybe you're wrong 2%. If you're right 11%. All right. So that's how it. Qualcomm. All right, this one. All right, I had to adjust my trend line on this, because the thing is, this thing, I previously had my trend line kind of up right about there, and on the hourly we were just chopping around like this. This is what it looked like in the past. We're chopping around. So because we've violated this trend line, but it hasn't impulsively sold off, it's just, broken below, popped back up, broken below, popped back up. It's chopping around. I decided to move my trend line to give me a more, a cleaner read. So I'm moving it down on the daily, down to the low end of this area. It's actually right about there. And now we've got a reaction zone, kind of a reaction cluster. So I'm looking for an impulsive breakdown of this now, this trend line, in order to reestablish a short. So what I did is I covered this position and closed it out. I just didn't like how we were chopping around. It wasn't it wasn't coming down and breaking down impulsively like I was expecting. So usually when that happens, I've got my trend line slightly off. That's okay. That's possible. You don't expect your trend line to always be perfect. One skill that you need to realize is that when you realize your trend line's wrong, be able to adjust it to find a more accurate fit. And don't just stick to your trend line, because your line is just a line that you drew. You're looking for the line that everybody else has drawn as well. And so I adjusted it. Now I'm looking for that impulsive breakdown. This big negative bearish divergence in the daily chart tells me it's coming. I just don't know when. Maybe we'll run up and hit the top end of this range again and extend the divergence, making a new high before we break down. So again, I covered this position, took a very small loss, and looking for some further information on when to re-enter this one. I like it, but again, I need to see that impulsive breakdown, and we just didn't get it where I was expecting it to show up. Okay, rock and roll McDonald's. MCD, this one. All right, here's what I'm doing on this one. If this one runs up to this resistance line, 220.78, I'll probably reestablish my short on that one. I'm flat this right now because it broke down below this level, has recovered it. Now it looks like it wants to run up and do a 220.72. With the election coming up and the volatility likely to really do some weird things, there's just no reason to be in this one short at the middle of the range after covering it right down here at the support area. So it's been a nice profitable trade so far. I still like it for further downside. I still have a profit target down here at 203. It's about 202.80. And I do think we're heading down there, but maybe we want to run up and tag this 220 resistance line and then roll over. So that's how I'm going to play that one. Oh, and on the hourly chart, you could see the bullish divergence starting to build right there. So there's your bullish. So that tells me that we're probably going to continue up a little bit. We could even do a full back test. I don't think we're going to, but if we do, that's a great objective area to short. This one is not bullish anymore. It's not in a bullish trend. This is your bullish trend. This was broken. Now it's sell into resistance mode for this thing. Peloton closing right at this trend line right here. So this is your major trend line on Peloton. And I'm out of this trade right now. I did short this thing obviously way up here when we broke, and it rode this thing all the way down for the most part to the bottom. But the longer term trade is this trend line, and we're at major support. So we need, on the daily chart, need to see this trend line go in an impulsive breakdown, and that's another re-entry. That's an opportunity to get short again, and then we look for further downside in this thing over a longer sustained trend, downtrend basically. This one also does not have negative divergence. There's no negative divergence in this. So that tells me what I think this is going to do is it's going to bounce off this trend line, run up, and make a new, slightly marginal new high right up in this area. The RSI will run up here about, maybe it'll run up to about 70 or so. And then you'll have your daily negative divergence. It'll look something like this, and the price will make a marginal new high. That will give us a cue that momentum is now starting to fade, and we'll then look for this daily trend line to break. So this trade, it could go now, but we don't have negative divergence, so I'd like to have that. But if it breaks this trend, it's a breakdown is a breakdown, so we'll take what we can get. But that's just some hypotheticals on that. PayPal. So this one I talked about in the morning video, what I was looking to do. So I covered it obviously this morning right at the open at support 175.60. It ran all the way up. Here's what I talked about. Go back and watch the video from this morning. This is exactly what I was saying was going to happen, what I thought was going to happen. I don't know what's going to happen. I just thought this would happen. Was looking for it to run up to 190. Once it broke into this area, I figured, okay, it's going to make a run at 190. got close, but they stepped in early and sold. So when everybody's watching a level, they usually step in early. I also was one of those people. I stepped in, reshorted the thing all the way down to, basically support at 179.98. I did hold this one into the close, and the price action today was pretty bearish. The fact that it gapped down, ran up, and then they stepped right in and sold it. I do think that, obviously there's some bullish divergence right here that is right there. So we could run back up to this 190 again. We'll see how things play out. But the longer term picture on this has big negative divergence across a lot of time frames. So here's your daily big negative divergence. All this price action right here is divergent highs. So that tells me that the momentum is fading, and we're heading down to 139.83 as the first level of support. You also have divergence on the weekly chart right here, big negative divergence on the weekly, and none of that's gone away. That's still there. So I like this to the downside. I think it plays out. We'll continue to watch this. Okay, that's all I got, guys. Leave me a thumbs up. Check out my trading and technical analysis course if you're new to the channel. I'll leave the link in the description below, and I'll see you guys in the next one.